good mornings to everyone.
Morning, 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 morning.
Yeah, good morning, Tucson.
Morning, Dr. Leaf.
Morning, sir. It's William, right?
That's correct.
Bottom of the range. I grabbed my stop, 12 ticks, and I moved it right under the bottom of the range. I was going to take a very small stop if it was going to come through. And I think it was like 5 or 6 ticks. And what I did was I sat in it. I gave 4 ticks worth of heat from where I got in, and it proceeded. So you can see that the delta increased quite a bit in this. And then it kind of petered out. So Ed wants me to talk about the delta after that I'm in a trade. And this is why I hate talking about it, because you can't trust the darn thing. It's fickle. It goes up and down. So I'm sitting here and it makes its way up. Both of these bars are kind of in that middle between 100 and positive 100 and negative 100. So it just didn't come back far enough. And sure enough, on the next bar, we got some positive delta. If I waited for this all the way up there, it would have been too late. I got in right away. It's the same chart. It just gives you a little bit more detail. So if we can trade down below this range, right, there's a good chance it's going to go. I tried to get in short on this trade right here. Where's the time? So let's go to 8:51.
Good morning.
Morning, Ed. I've been maligning your name.
Sorry, what?
I've been maligning your name.
Oh, really? That's okay.
Yeah, I still don't get it. Anyway, so I tried to go short here. So it's my trade on the 10, right? I've got a bar that comes up higher than the previous swing, actually even higher than the second swing, and it closes down. So I said, if this closes down, I want to go short. So I had the auto trader set with a -1. I wanted to give myself a little bit more leeway in case it came back up. And sure enough, this is what happened. That bar closes at, where are we here? It closes at 33.25, opens up at, 33.25. So 33.25 is right here. It barely comes back a tick. Doesn't come back the 2 that I asked it to come, and it blimp all the way down. I should have just, had I used a 0 instead of a -1, maybe I would have had a fighting chance to get in, but it never came back. I was hoping that it was going to come back up, but no chance. So I closed it once it got down too far. So this chart here is nice to kind of give you an intra-bar perspective on what is happening on the charts. I don't recommend that you necessarily trade this chart, even though that I took a couple of trades off of it. Well, this guy over here. Now, yes, I took this trade over here, but what are my reasons for taking this particular trade? Remember, don't take a trade just to take a trade. You need at least 3 reasons to take one. So if you look at this particular trade, it had come up from the range, came down to the bottom of the range. So that's reason number 1. Reason number 2, it's near S1. Right? There's 2 good reasons for taking it. It's at the top of the range, comes all the way down to the bottom of the range. And then I had a small stop. Small stop. You can, if you're wrong, okay, well, we tried it. It didn't work. We can make it back on one trade. All right, so we're looking in and around this zone over here. All
You know,
right.
but one thing you could also say you take a trade, right? And it fails, you could always take the other side.
Oh, that's true.
You know, I mean, there's no reason to stay locked into the one direction just because you wanted that one to work. If it fails, that's a good indication that maybe you didn't get that one right, but the next one's got to go somewhere, right? If it's going against your trade, it's got to go somewhere. Point is, when do you get into that failure? So if it hits your point of failure, certainly if it hits your stop, if you get a pullback, get in. If you don't get a pullback, then you have to decide maybe just jump on when it takes out your stop. It all depends on what it looks like. But that's just as good a reason to take the opposing trade as any, because we don't know. We don't know, but we put all these things together and we take a direction, we take the risk in a direction we think, and then it fails against us, and that's for a reason. Well, then maybe join the guys who are causing the pain and jump on their bandwagon because they're causing the pain, and you can cause some pain yourself, and profit from it.
Yeah, the pain. The pain. We go on the side of the pain. Actually, that's a good way of thinking about it, right? I like your analogy, though, of trading from the dark side. You think that this is what's supposed to happen, and then you just take the opposite side because the big guys are just using it against us.
Yeah, I think I've been talking about that for like the last 20 years or so. Right? Join the dark side. I think I said that a long time ago. Join the dark side.
I like that analogy, actually. All right. So let's take a look at a 30-minute chart over here.
Your who got hurt trade is designed around that. I mean,
Yep,
who
that's
got
exactly.
hurt? Like, let's go hurt him too.
So what's so the who got hurt trade really became something that I looked after, or I started looking at that trade a while back. We're talking maybe 2010. I had become Ed's programmer at the time. Brad, his previous programmer, had gone off and opened up his own room, and Ed was sitting there wanting stuff done, and he kind of didn't know what to do. I'm sure he could have easily found somebody. I volunteered to give him a hand. He asked me, he told me, I don't know if you're any good. He says, well, you can fire my butt if you don't like me. And I says, okay. And anyway, that was a beginning of a 5-year period of time beyond the training that I spent with Ed. So I remember one day, Senor Ed calls and says, oh, you wouldn't believe what I did this morning. I mean, this afternoon. He would know, his pattern was he'd trade first thing in the morning around 5:30ish, and he'd almost always be done by 8 o'clock when the room was beginning to start. And after that, he traded in the morning. He would generally come back and trade a couple of his other accounts in the afternoon. Sometimes I'd trade with him. Well, he called me later one afternoon. He says, Tony, I took a trade with 20 contracts. I took yeah, that's not like you taking a trade with 20 contracts. And he explained what he did, right? It was something exactly like this. Let me go back. Where the market was coming back, you can tell that the market's generally rising, right? It comes back to an area of support. He had waited for the market to come back down, and he put in an order for 20 right a little bit above the top of the box. And as it was coming down, it filled him. And I still remember him talking about this. Do you remember this conversation, Ed?
I don't remember anything anymore.
So he says, Tony, you should have seen it. I'm not making this up. You actually said this. I'm not a person to make stuff up. He says, I got filled. It went ka-chunk, 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 ka-chunk. And finally, I got filled because I had limit orders. It wasn't a market order to get filled. But then to get out, it took a little bit of doing. And you talk about me being emotional. Well, he was the way that he was talking about it sounded like he was pretty emotional as well. He says, I got out, and when you trade 20 contracts, what happens is it's not like trading one contract where you're all filled. As soon as you start trading anything over 5 or 6, you don't get filled all at the same price unless you got a limit order. And it was in the afternoon around, it was just after 1 o'clock when he would come back to trade his other accounts. And he's saying, okay, I got filled, and it went ka-chunk, ka-chunk. He got like a block of 3 or 4, then another block of 3 or 4, then a block of 3 or 4. It didn't all happen all at once. And I said, oh, that's pretty cool that it actually did that. And ever since that, he explained what he actually did, because that was not a trade that he talked about in the room. I've been paying attention to it, and I've been using it ever since. It's a great, great trade. They always come up a little bit higher than the prior swing, and they come back, right? Look at this. We've had we've got a low sitting at 3 o'clock in the morning, right? They make a higher low right next to it. The next time that they come down, it's even higher. The low is higher than this area right here, right? Hold on 1 second. So we got this low, we make a higher low, we make a higher low, come back, there's another higher low, come back, another higher low after coming up a little bit. You figure that, it's making a good solid move. Now let's ignore all of my horizontal lines. It looks like they're doing a thing. And then what do? They come all the way up over here. And if I draw a horizontal line, I'm going to take this horizontal line from earlier. I'm going to put it on this swing right here. Is there a reason why they needed to come back all the way this distance, right? After higher low, higher low, higher low, higher low, higher low. I mean, they should have just continued going. No, what do? They come and they get everybody that's still thinking short. They take them out. And then it comes down into the range. And it's not even a small pullback, right? Look, 1, 2, 3, 4. This is what Ed defines as a no bus rider approach. He doesn't want anybody to be, I'm not talking Ed, I'm talking about the guys that are doing this. They don't want anybody to come along for the ride. So they make it look like it's going to go who knows where, and we're all anticipating it going, and sure enough, it doesn't go anywhere. So why, the better trades are these where you're if you guess right and they actually follow through. But most of the time they do this, where they go up, they fake you out, and they come back just to come and get your stop. So why not play their game, right? Here's our lower swing on this side over here. We got our upper swing up at the top. I've got it 2 ticks lower than the previous swing because that's a fake out. And they come down a little bit lower. If I was here, I would have taken that long, right? They came down substantially lower. They closed into the existing congestion, and sure enough, up and down, right? And I did it on the backside, right? But it's exactly the same thing, right? My stop was in behind this bar right here. Yeah, so that who got hurt trade is a really, really good trade. It's trading from the dark side against what the normal perception would be. But you know what? The next time that you're doing your trading, pay attention to the number of breakouts that you see that fail. The majority of them, I would say 7 out of 10 fail. So why not go with the averages, right? The averages say that if they're going to be breaking out, most of the time they're coming back in. So that's what that is. Yeah, that who got hurt trade's a really good one. Trading from the so we've got James joined us yesterday. Welcome to the group, James. We've got 3 trades that we basically live and die by most of the time. We've got our trend trades, which are just the diamonds on the chart, right? The diamonds, they're in the same direction as our big moving average. Moving average is up, we go long. Moving average is going down, we go short. We take those trades. These trades, generally, when they're correct, are worth way more than just 4 ticks like we've been scalping. You can usually get way more than 4 ticks if the market's trending. If the market's not trending, then you got to live with the scalp. Most of the time, the market isn't trending, so we don't mind living with the scalp. Just take 4 ticks. Thank you very much, and we come back and reset. Wait for the next one. Oh, look at that! Our POC's moved from up to the top over here down into the middle. Let's adjust our lines. So we're clearly in the middle of the range, above our robot box over here, below this little section up at the top. So I'm going to get rid of this line. I don't want this one. Well, actually, I have this one come down a little bit further.
Hey, Tony, while you got a minute, and I know you probably said it before, but can you speak to the 3-bar trend, and why is that sort of the go-to as opposed to 2 bars or 4 bars or 5 bars?
Okay. So so I've been doing this a very long time. I've written auto traders for a ton of people. In my humble opinion, someone comes to me and they want an auto trader written, right? They'll spend $1,500 to get an auto trader written. You get an idea, you want to get written, speak to me. It'll run you about $1,500. Thing is, most people that come to me that want an auto trader written, right? They're just doing it off the top of their head, right? They're saying, "Oh, this would be really cool. Write an auto trader. It's only $1,500. We'll get it done with Tony." When someone comes to me and they say they want an auto trader written, I can tell almost instantly whether or not it's going to be a moneymaker or not, because I know through experience that most of the time the breakout burns you, right? 7 out of 10 times the breakout doesn't go, right? You've got a ledge over here. They finally break it out. It looks like it's convincing. And what do? Right back against you, right? So what is it that we're trying to do? We're trying to get into the trend if supposedly there is a trend, right? So how can we tell if there's a trend? Well, we just use the moving average, right? So this is a whole moving average. It's not the standard SMA and so on. It's a lot smoother than the other averages. It generally gives us the trend. So if the market is moving in a certain direction, you want to hop on to the trend. Well, where's the best place to get in? Well, the best place to get in typically is when the market is pulled back. So since they play these games where they go up a little tiny bit to get everybody excited or to take everybody stops and they come back, the idea is, okay, they're going to play that game. Well, we're going to play the game with them. We're going to just sit in the bushes waiting for them to come back into the area, thinking that they're going to be going in the same direction. If this moving average is rising, we're expecting the market to rise. So why do we take the trend 3-bar only? Well, when I first started training you, or when you were on my first sales call with me, what did I tell you? You want to, if you got a rubber band and you stretch it out, what does it do? It stays taut until you let go. When you let go, it's going to snap back. Well, if you've been in a trend, right, up the lows are higher and higher and higher and higher. You want to start in that direction, but you don't want to get in at the top because you know they're going to be coming back 7 out of 10 times. So what you can do is you wait for a good pullback. 1, 2, 3, 4 red bars and a green one, right? This one here gave 4 ticks, but it had a little bit more legs to come back down before that it went back up. So generally speaking, the fact that we're taking a trade when we've had momentum in one direction for a while and we have price coming back is a really good way of getting into a trade and getting into a trend. And if you're right, and you pick right. So this one over here, let's talk to this one over here, right? Pull back. Now we didn't get 3 over here, but we came back to our purple line, right? We know that that purple line is an important line. Well, this would be a good place to try and hop in the trend. Well, we've had a big push down. Now we're retracing. Remember, nothing ever falls directly to China. It's going to take some pit stops. It's going to jog back and forth. So 3 steps forward, 2 steps back. We get in down here. And then on this type of a trade, you don't want just 4 ticks like we usually try to get. You're looking for more, right? Well, where's the large logical target for the next place that you want to get in? You want to, your next target, the safe target, is down here at the bottom of the last push that you've had, right? Put your order 3-4 ticks below it. Thank you very much, Mr. Market. If it makes its way down there, that's $200 to $300 on that move, right? Then you wait. Comes back. We have a little pullback over here. Our POC would not have been there at that time. It was sitting up at the top. But do you really expect the market to continue to push down after that you've had such a big prolonged push? You know, eventually it's going to come back some, and that's exactly what it does. It comes back. But where does it come back to? Right? Where's a good place to get in? Well, the good place to get in is where you switched from long to short. So big push here. Up here, now up to this point right here, you might be saying, well, you know, this is a double bottom. It might go up. But the minute that it breaks, this area that's in this zone becomes a resistance area. It was support, becomes resistance. So we're down below it. Anywhere here is kind of an open space, right? Which is the trade that you want? Well, you want the one that's coming up here. And look at that. It even coincides with green bar, red, and our average is screaming down. So yeah, of course you want to take this one. Let's ignore all our horizontal lines. So if the market is screaming down like this, well, maybe you try it with a reasonable risk down into this little zone, right? And maybe it continues, right? I tend not to want to take these trades over here. What I prefer to do is to wait for the 3-bar extended. 3-bar extended pullback means no overlap, right? Very, very little overlap. You want to have a minimum of 20 to 30 ticks. The closer to 30 ticks, the better. Our bars are 10, right? So in this case, we have an overlap of 1, an overlap of 2. We got 27 ticks plus a little bit higher. You know, we've got 30 ticks of a pullback in here. Yeah, you can take it in here. There's even enough room to make your 4 ticks for your first target before the top of the swing. Right? The reason that you think this looks like it's counter trend, but it's not really counter trend. The market is falling. Yes, it's been rising up, but look, it's bouncing up against this node over here that we made, and it's coming back down. So what is it that we want to do? Well, we want to participate near these inflection points. These are the best places to actually take trades. And before I take a trade and I'm not paying attention, I'm going to pause this. So your question was, when do you sometimes you take it with a 1, sometimes you take it with 2, sometimes you take it with a 3. Ideally, you want it to be 1, 2, 3, back down in the same direction as your moving average. But if your average is sideways, or you're clearly in a channel like it was that we were in here when I took this long down at the bottom of the channel over here, then yeah, you can go either way. It doesn't matter which way. I went long here, but I could have just as easily gone short from the top. If the moving average is falling, right, you've got a few options. First option is just wait for a good 3-bar. Now this 3-bar that's here, can someone pipe up for me? Preston, if you can turn on your mic, why is this trade right here not a good trade? This red here, it's following all my rules, right? Green, 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 red. Why would you not take this trade? I'm not singling you out. Just we've been talking about that recently.
Well, you probably didn't say this, but the green is in the first green is in the box.
Very good. And what's the other problem?
Well, the momentum blue bar.
The blue bar.
So,
yeah, that means
yeah.
momentum coming out. If you're
Yeah.
taking a trade out of a blue box, and yes, sometimes you get it and it doesn't work, right? But most of the time, when you got a blue box, remember this is a robot box. The robot box is telling you that you got a machine running up and down over here. If we close up more than 50% up through the box, we come into the zone, right, up through it, likely it's going to continue in that direction. Why stand with your skateboard in front of the Mack truck? This is not the place to take it. The second push up would be better. And in fact, it didn't give 3, but it still paused after the second push. All right, here's your third one. But this one here is way better than anything here because it's also got this area, which was where we broke down from the last time, right? So technically, if you want to do it like Ed does it, what Ed will do is he'll say, oh, I'm just going to take it near the line. Why bother letting the market use up 2.5 points before I get in? Maybe I get in around here. If I'm wrong, I get out. And two different philosophies there, right? It works and then it doesn't. I prefer to kind of wait for the market to settle itself out. And maybe what we do is we use our we use this chart over here to tell us that it's petered out, right? Maybe we use a jog in here because this allows us to see inside the bar, right? But, you know, some basic rules. You've got the bars. What time is it? Oh, it's 9:30. All right. If that's not clear and you want me to talk about it more, let me know, Tucson.
We're starting.
I know. I just noticed that. I started the market moving. I said, oh, all right. Let's see what's going on over here. We've been sideways for a little bit. We're going to let the market kind of settle itself out. And
You have paused.
yes, I know, but it's not 9:31. So right here, we've got this node, and we've coming up here. So if this closes up and back down, who got hurt back into the POC? We got our robot box telling us that we're in an up and down area, but you know, tell us something new.
I put my trades in Skype.
Thanks, Ed. So I got nothing so far. I wouldn't have minded it coming up over the ledge to get that failed breakout or who got hurt trade, but it didn't come up high enough. I could have taken this here, but I'll wait. We got trades all over the place over here, so there's no point in just taking every trade. You don't have to take every twist and turn. So we're making a box, a robot box right next to the previous one, and our POC is sideways, right in this little zone. We've got a green, it's building a green bar, but it's double top with the previous 30-minute candle. Let's see what happens. If it comes up and comes back down, that wouldn't be too bad a trade. Problem with this bar here is if this closes up, it's going to be a navy bar telling us that we've got momentum coming out of the box. Our delta is decidedly negative. So some folks will just short here. Mark's not here at the moment. He'll take it up here at the top of the box and hold it for 6. I would prefer, if I do that, I'd like to see it come out of the box and then come back in. So Ed was mentioning yesterday that when we have a prolonged area where we've been going up and down, we're making a launch pad. So are they thinking up? Are they thinking down? One thing to bear in mind is that the open for yesterday is sitting way up here at 60. We're sitting down at 34. It's not unheard of for them to make their way back up there. We got the pivot further up as well. So maybe the boys here in New York or in Chicago want it to go up. Oh, I didn't want to move that. I want to move the other one. Okay, there's our line. Come on, make a nice little deep pullback. Oh, and I'll take you up. So we're outside of the box. We're not going to get a navy bar telling us that there's momentum. Our delta is rising. The last few bars, we've all had positive delta. That means they're paying the price that's being offered. Okay, if this closes down, I will try it short. NASDAQ.
Order submitted.
Oh, did I? Oh, I got it set up -1. Tony. All right, never mind. There's a
Order
target that I
canceled.
missed again because sitting here talking and babbing. All right. Hope you guys got that.
Curious, Tony, I don't see a 3-bar, so I'm assuming that was just because we're bouncing off S1.
Bouncing off of S1, failed breakout over the previous swing with my horizontal line. That was worth it's worth full 4 and 8 had you taken it.
The bottom of the blue robot at S1, was that any consideration?
Yeah, of course. Right. We came
Okay.
up, tapped to S1, closed back down. We're up above the swing at 931.05. Yeah, for sure. My bad for not having the offset on. I'm going to try long on close. Delta is rising. 3-bar back up to the upside. We've been sideways. I think that the bias is to the upside, but we'll see.
Order filled.
There's 3. Okay, so my delta is still sitting hot, as a high number, 200 and change. And the market's moving down, Ed. So how do we explain the delta being over 200 and the market pushing down? This is why I don't like talking about it. It's going to get stopped. Come on. Okay, the delta's negative now. And if it makes its way up and it doesn't follow all the way through, I'm going to close it if it comes halfway down. If it, there it goes, inching its way up. Come on.
You know, there's 3 factors. It's not just the delta. It's the ticks coming in. Is volume increasing on the uptick or the downtick? Because we didn't
Volume
have the
increasing.
delta back then. That's a new thing you put on here. I never used it.
It's going to get
So
stopped.
it's the ticks coming in on the volume increase or against the tick. And then there's the speed of the bar building. Are they coming in
Subfield.
faster on the up or the down? Or is it gyrating up and down, between the bid and the ask? Because nothing's going to happen unless somebody market orders over one way or the other.
Uh-huh.
So it's
So
not
why
just
do you
the
want me?
delta.
Why do you want me talking about the
I
delta?
don't want you
If
talking about the delta. You don't have to talk
what
about
would
the
you?
delta.
What would you like? What am I supposed to be
Focus
talking
on
about?
the volume. Focus on which side of the bid and ask is the volume coming in. That's what you focus on. Delta just kind of tells you that there's more buying than selling, but that can
Yeah.
change in a second. More
Yeah.
important is, does the volume increase with the ticks in your direction or against the ticks? And how fast is it doing it? That's more important than the delta, because it changes. It's nice to have the delta positive. That means the buyers are solidly in control or the sellers are solidly in control. But that can
But you,
change
you
in the
saw
next
that.
tick.
But you saw the delta. It was almost 300,
I know.
and then all of a sudden it started.
Yeah.
It was still high, but the price
So at
was
that
beginning
point,
to fall.
was the volume coming in with that delta, or was it not doing anything?
I wasn't paying attention to that. I was paying
Well,
attention to the delta.
no, it's just not the delta. It's those three forces in the market, right? Volume, speed, momentum, and price. The bid and the ask. Which one's doing the supplying the inventory?
Hmm. So I was an early taker in here. It gave 3 ticks, and it came back, took me out by 4, and it's right back to where it started.
And yeah, it's all my fault.
No, it's not your fault. No, I don't understand what you want me to be talking about when you're talking about what it is that you were talking about yesterday. I still
want
don't
you to be
follow.
talking
You know
about
what we
anything,
you know
Tony.
you know what we
Do whatever
should
you
be
want.
doing?
But if you're going to talk about stuff, you can focus on the price action. That's what I'm saying. You got to talk anything. Talk about the price action, or you can talk about last Tuesday's lunch. I don't.
No, I don't want to talk about last Tuesday's lunch. The previous room that I was in, they would talk about everything but what was on the chart.
Well, that's what I'm saying. Talk about what's on the chart, not how you're feeling, not to the market gods. The market gods don't listen, just like anything.
They don't listen, do they?
Market
You're funny. We're gonna have to
I
add
like
that.
that one. I like that one, Ed. Market gods. Yeah.
All right, so we're definitely in a sideways zone. Had I waited for a little bit further penetration, I would have probably fared better. It gave 3, yeah. And then it kind of came against me. Okay, let's just let it get out of the zone before that we do anything more.
There's different types of traders. There's the very passive trader who just kind of waits for the signal and just takes the signal. Then there's the hybrid, an intermediate trader. He'll wait for a signal, but he'll pick and choose on the signals, because you get a lot of signals. And then there's the aggressive trader, where if he gets in too early, but it reconfirms, like he hits that green dotted line and trades up, he'll jump back in. There's different types of traders, and as you go along, I would consider myself an aggressive trader, but I'm also a very sparse trader. I don't trade back to back very often. Usually there's a considerable amount of time between my trades. So as you develop, you're going to find out what kind of trader you are. But the other kind of trader, though, is the scared trader, and that's the trader who's going to lose. You can't be afraid of this stuff. You're going to win. You're going to lose, and you're going to have to base whatever you do on some very sound rules and some consistent action. It's the consistency of your action that's going to determine your outcome. Because the arbitrary stuff you do, there's no controlling it. It's too arbitrary. You have no pattern. And we are pattern traders. I mean, that's all we got to look at is patterns on our chart. And the way we can quantify patterned events is by looking at the forces that you can't code. You know, you can't code. Maybe you could if if somebody knew how, but how can you code the relationship between the upticks and the downticks and the volume on the bar and the changing of the delta and, the shifting between the buyers and the sellers? It's very hard stuff to code. I'm sure if we had some Dartmouth kids here, whiz kids from Dartmouth, they could probably do it. I actually know a couple of those kids. Well, knew them way back then.
So those are the kids that are giving me all the grief?
Yeah. They write the algorithms that trade against us. They're the ones who write the pattern sniffers and write the setups, the who got hurt setups and stuff like that. And they write these robot boxes and they set up events. Remember, they have access to all these indicators just like we do. And they know the combinations that most people use, that traders have used over the years. And people have been doing this for 100 years. So they write stuff to set up scenarios, and it's like the sting, they set it up and they get you, and they do it in groups sometimes, and it could be like anti-Mike D Thursday and anti-Bollinger Tuesday, stuff like that. And I know this woman, her son went to Dartmouth. And he graduated, and he got picked up by Goldman Sachs. Out of the box, he was making like $300,000 a year out of the box, because he was a whiz kid programmer, and they hired him. And I'm sure he he wrote a lot of programs for them. And it is what it is. So those different types of trader, you have to kind of figure out what kind of trader you are. But whatever you are, just make it consistent, because you can fix it once your actions are consistent. If your actions aren't consistent and you're all over the place, it's very hard to fix.
So one of the things that I encourage everyone to do after that they've taken their trades is to look back at them and ask yourself, would I take that trade that I just took over again, irrespective of the result, right? You just grab your chart. Well, we have to wait for this thing to move. So I'm just going to, it's not doing anything right now. I'm going to move over here. So I'm looking at this trade right here. I went long on this next bar. I'm saying to myself, should I have taken this trade? And I'm looking at it now, and I probably wouldn't take this trade next time around. Yes, I'm lower than the previous range, but it traveled a decent amount. It got me in halfway up the box. Now, there wasn't 4 ticks to the green line. It's been shifting a little bit, but it was probably a little bit lower. Irrespective, I didn't end up getting.
Right. You're out of action.
I know I'm out of action. I'm just talking about this. It's not moving. We're sideways at the moment. We're right on the POC. So I'm just looking at this again, and yeah, I've got 3 reasons to take this trade. It's a who got hurt trade, and we're trading back into the box, et cetera, et cetera. But I think that the fact that I'm close to that green line is part of the problem. It was still a 3-bar, right? I'm not willy-nilly taking every single twist and turn, right? Still taking red, 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 green. Lots of stretch in the trade, right? That was another reason why I'm even looking at the trade. It's just that it didn't end up moving in my favor. It gave 3 ticks. So real exciting stuff this morning. We've been hovering around the POC. Is there news? You know what? This morning I've been doing some stuff and I didn't check to see.
I didn't see any news.
What day is today? Today is Thursday. Man, already Thursday. Today Thursday. Apply. And let's go down the list. So we had some 8:30 news, car sales, truck sales, okay, all minor stuff. 4 o'clock, market will be closed by then. All right. Okay, we're breaking up to the upside. Let's see what happens here. If we get it to come up over that S1, back into the range, I'll try it short. I won't take it here. It's got to come up a little bit higher than our previous breakout line. I'm going to grab this line. I'm going to put it up here. Boom.
They've been doing stop runs. They do the little small breakout, then they jump back.
Yep.
And a small breakout. A lot of who got hurts here. Little breakout and jump back. Breakout, jump back. And it's mostly choppy.
Yeah. So most of the time we can get done no problem in the first half hour or so. If the market's doing this though, man, it's going to give us a little bit of grief. Okay. All right. So we need to be careful. Our delta is increasing and it's increasing with lots of volume, right? We've got the bar that's, this may be the bar that pushes us out of the area. It's the volume's the highest amount of volume that we've had since 9:30. Came up nice and high. Okay, there's our blue bar telling us that there's momentum to the upside. Gotta go higher. We don't have a 3 bar here, so it hasn't had some consistent movement up. And there's our bar. If this closes down, I'll try it. Closes up. We're done for the area. Okay, so there we go. So next line up, we're at the POC.
See, I would be
44.25.
I would be
Sorry.
looking for a pullback buy.
Yeah, pull back long.
Not to say that a quickie scalp might work, but it's got so little in it.
Yeah. So we're sitting, so if you look at your 30-minute chart, we've got some wicks sitting up around 44. Got 2 of them up here. And the bulk of the volume that's been traded in this area is right near our red line, our value area high. So if it makes its way through here, well, they finally decided to move. Almost 10 o'clock. So there's our 44. Pulling back a little bit from it. Ideally, it'd be nice to have it come all the way back down to 40-ish. If we're going to pick up the long, and they're actually going to go somewhere. The delta has settled itself out. I'll try it short for a very quickie scalp. There's
Order
tick.
filled.
NASDAQ's rising. It's 2 in a row, Ed.
Well, like I said, you want to get in the long. Sometimes it'll give you a deep pullback.
Yeah, but
sometimes
it
won't.
didn't come back deep enough to go on the long.
Well, if the short fails, that's always the other option. But you only got a few ticks to that level to the left there.
Mm.
So the long would have had to been where you took your short. If you were going to take it, or just wait, or just let it pass. This might work, but the risk reward is always off on the counters. It's just the nature of that signal. So I would want to get the long. The blue line looks like a good place, but doesn't mean it's going to give it to you. Our desire and what actually happens are two different things. And if you don't get it, you don't get it. But it's better than taking losses.
Yeah, just looking at the NASDAQ up here. And it's boxing out at the top.
So the volume is coming in on the down ticks, if you've been noticing.
Come on, one big swoop down, get everybody stops, and then go up.
As long as that keeps happening, you're still good.
Sir, say that again, please.
The volume has been coming in on the down ticks, if you've been watching. And as long as that continues to happen, it's still good to go. But, it needs to take out your entry number. It needs to trade below that. So this bar is your bar to either take a break even or to sit it out. And just
It's a little light on the volume. I don't know if he's got a new microphone or what's going on. It's a little harder to hear him than usual.
Sorry, I'm kind of lounging.
You're chilling.
Yeah, I'm chilling. Yeah, how's that? Better? Yeah, so
I-
watch
I-
that
I-
volume.
Target filled.
I
There you go.
closed it.
Yeah.
If it's not going to go, it's not going to go. It should have gone already.
Well, I
Sure,
don't
of
know.
course, it's going to go after that I take it.
Yeah, it has nothing to do with your desire of time. We're not trading time. But as long as that volume was coming in on the downticks, you were still good to go. But, you could always decide to take a break even. That's better than a poke in the eye, and it's much better than a loss. And once you lose confidence in the trade, it's the best decision, just let it go. But base it on what's happening. So in this case, what was happening was you still had it good for the volume. It was still coming in your direction. It's only when it starts to shift away from your direction, where its volume is increasing on upticks, that you have to, make that decision. And you boxed, and you came out the bottom of the box. As soon as that tick took out your entry, that was a good indication that, yeah, it's probably going to go. But next time, just keep that in mind and go through the same thought process. And you have to go through the same thought process every single time. And the only way to do that is to start practicing that. Go through that same process every time of those three forces as you're in your trade. But here's your pullback long. Remember, your original plan was to try and get in that long? So look at your 30-minute. Is it a true candle, or did they just run up just to get more longs in, so they're going to come all the way down to maybe 39.30 again? Look where the next volume shelf is. It looks like it's down there around 39, 30.
Well, right here, around 37.
Yeah, around 37. Yeah, so it looks like they're going to go there. And if they take that out, the next one is the POC down. It's possible. It could be a big cleanup candle. It actually looked kind of like a cleanup candle so far. Who knows?
Well, you got a big wick on the top side, and on the bottom side as well.
And there's 2 minutes on that candle, so it's going to close right around its open if it doesn't reverse completely. Next candle will open right on the POC, and we'll right back to where we started. But it's the best long entry if it's going to go. I think you got your news pause thing.
Yeah.
So me personally, I'm kind of a more aggressive trader. I would have traded your green line, considering that you're trading above those boxes to the left. But
But
that's
it hadn't
me.
paused yet. It hadn't paused yet.
I'm sorry.
It hadn't paused yet. You're going to sit in the green line.
I would have traded the.
Where's your stop? Your stop is going to be down at 32 if you get in the green
Yeah,
line.
that's right. Yep. But I wouldn't take 32. As soon as it started trading down into the boxes on another candle, I'd be getting out. But you know, that's me. I'm kind of more aggressive that way. And that was a 3BR off a
Mhm.
box.
Yeah, just before the news, before 10 o'clock.
Yeah, well, there's no news. It's, you know, everything we have on our charts is just a convention. It's kind of tools we use to describe what's happening. But, you know, my charts are pretty bare.
Mhm. Well, I don't have much on my, other than the horizontal lines. What do I have on my chart? I got a 1 moving average.
And I try and keep it that way so that I can concentrate on describing for myself what's actually happening, because I'm a lot faster than any indicator. You know, indicators are all lagged. And so I try to stay current with the current tick. The most spread I use is a 3-tick spread. You know, there's the bid, the ask, and the nothing. So that allows me to concentrate on the other things like the ticks, you know, the volume, on which tick, the direction, the speed of the bar building. That has a lot to do with it. Um,
It's only going short from the, is that a good idea, from the top of the box?
Well, if you double top, back down, it's one thing. Just pay attention to the delta.
if you're going to do that, call that event Gertrude and do it and track it and see if Gertrude works for you. You know, is it a good winning
Okay.
strategy? And that, because you
Okay.
said, is that a good idea? Your ideas are as good as anybody else's. So whenever you come up with an idea, call it something, identify it. It's a pattern. And call it Gertrude or whatever you want to call it, and consistently trade it and see how you turn out. In the beginning, you have to do that. Now, one of the things people gravitate towards, you know, places like this is it's because we've done that. So we have a few signal strategies that we use, but it's only because we've already gone through the pain for you, and that's what you pay for. But you can do that for yourself too. You know, you can just go through it and just be consistent with whatever you do and identify the events and do them consistently and see how they turn out for you.
Thanks, Ed.
It'd be great if I gave you the secret, but there ain't any.
Gotta pray to the market gods.
Yeah, that won't help.
Hey, it might help your psyche.
They're dead. They ain't listening.
So you see that long, and you had planned on it, but you didn't do it.
I didn't do it because it was right at 10 o'clock.
So what? 10 o'clock. There's no news today. That's your convention. There's no news. There's no news. Why post 10 o'clock? It's arbitrary. It's only relevant if there's news.
Nice little jog up. We've got the pivot a decent amount further up. We've got a horizontal line where we're at the moment. That's why it's pausing here. It's pausing here because this is the high, the most recent high that we've been at before that we broke down. So it's either going to come down or it's going to meander in this area before that it does its thing.
I once knew this trader, and he was a really aggressive trader, but he also made a lot of money. But eventually, his aggression got the better of him as his greed kicked in and his ego kicked in, and he just refused to be wrong because he was winning so much, and that was his demise. And do you remember him?
Oh, Brad?
Was it Brad? Uh, I don't remember his name, but you know, he wanted to sell me his car. He wanted to sell me his house. You know,
That was Brad.
that was it, right? And it was
That was
like,
your programmer.
oh, okay. Well, and he was doing great, and then he snapped, um, which was too bad.
Order filled.
But so he would take his signals, and you know, he would just on to the next one, on to the next one, and he was pretty advanced trader. He would scale in and stuff like that. Um, and but you know, psychologically, he got all messed up. Um, and it wasn't that he wasn't making money; he was actually making really good money. But something happened, and these are the things we have to watch out as a trader. You know, there's and which is very important. Why you need to identify what kind of trader you are, and once you can do that, if you don't like that kind of trader, you can always change it. You know, if you think you're too passive, you can
Wow,
get a little
look
more
at
Stop
this.
aggressive.
filled.
If you
That's it.
think, yeah, well, you know, we're going up, Tony. I mean, you know, the trend has started. And if you think you're too aggressive, you know, you can tone it down a little. But it's always a self-evaluation, and it's not that you're evaluating yourself. You sit down and you evaluate your trades, and you look left. You put every single signal you take at the hard right edge, and you decide: was this aggressive? Was this passive? You know, was it the confidence? If I got out, why did I lose confidence in it, and stuff like that. And you have to do this every day, every time you're trading, every trading day. I mean, I recommend you do it every trading day. I do it every trading day still, um, and that helps you stay focused, so you don't kind of lose your focus, and it helps you stay very disciplined because you know the market gods are there, but there's also the market demons, and they will come and get you. So you got to watch that.
All right. I'm annoyed that both of those trades didn't end up working. Like messed up over here, taken out by a tick. This guy here, look at that, taken out by a couple ticks again. Yeah. I'll take a couple more trades later on in the day. I'll just leave the chart running, and if I see something that's a little bit cleaner, I'm going to take it. But this would have been a good place to take it. We're at the high of the most recent high. It just came up one more leg. Maybe what I need to do is just wait for the second leg up on it, because both of these trades, had I waited for the second leg up, I would have been fine. Look at this. Picked right, just got stopped out by a couple ticks, Ed.
Yeah, and the better trades are to the upside. That long, I don't know why you didn't take it off that launch pad. You planned on it, you even said it, but you didn't do it when it happened. So something to think about.
All right. Okay, that's it for this morning. Anybody wants me? I'm available after 1:30 ish. Maybe closer to 2. Just message me. All right. Thanks for coming, everybody.
See you later, Tony.